Hey everyone, and welcome. We're diving into the world of investing today. This deep dive is all about getting you comfortable with the idea of investing. We'll unpack why it matters, what your options are, and how to get started. So think of it this way. Investing is like making your money work for you. Instead of just sitting in a savings account, your money's out there earning more money. What's your take on that, expert speaker?
Well, the thing is, saving and investing often get lumped together, but they're actually quite different. Saving is more about short-term goals, like having an emergency fund or saving up for a down payment. You want that money safe and sound. Investing, though, that's about long-term growth. It's about building wealth over time.
So it's less about stashing cash under the mattress and more about putting it to work.
Exactly. And one of the biggest reasons why investing is so important is because of this thing called inflation.
Inflation, right. That's where things get more expensive over time.
Exactly. Think about it. Remember when a gallon of gas cost way less? Or how about that candy bar you used to buy for $1? Inflation eats away at the value of your money if you're not careful.
Wow, yeah. I never thought of it that way. It's like my money's slowly shrinking if it's just sitting there.
Exactly. And
Yeah.
that's where investing comes in. It helps you stay ahead of inflation.
So if inflation is like this sneaky thief trying to shrink my savings, investing is my way to fight back.
Exactly. It helps you build wealth and reach your financial goals faster.
Okay, so we know investing is important, but how do we actually do it? What are some of the ways people can invest their money?
Well, there are a lot of options, but let's start with a common one. Stocks.
Stocks, okay. That's where you buy a tiny piece of a company, right?
Exactly. When you buy stock in a company, it could be anything from a tech giant to your favorite coffee shop. You're essentially becoming a part owner.
So if that company does well, my investment grows.
Precisely. Think of it like owning a slice of a pie. As the pie gets bigger, so does your slice.
Okay, that makes sense. But I also imagine it can be risky, right?
You're right, there's always some level of risk involved with stocks. Their value can go up and down.
So it's a bit of a roller coaster ride.
In a way, yes. But historically, over the long term, stocks have generally offered the potential for higher returns. So there's a trade-off.
Higher risk, potentially higher rewards. Okay, I get it. So what about something a bit less roller coaster, something that might let me sleep a little better at night? What about bonds?
Bonds are different. When you buy a bond, you're essentially lending money to a government or a company.
Oh, okay, so it's like I'm giving them a loan.
In essence, yes. And in return, they promise to pay you back the amount you lent plus interest over a set period of time.
So it's a bit more predictable than stocks.
Generally, yes. Bonds are often considered less risky than stocks because they tend to be less volatile.
But they might also have lower returns, right?
That's often the trade-off, yes. It all comes down to finding the right balance for your risk tolerance and your financial goals.
Makes sense. Some people are comfortable with a wilder ride, while others prefer a smoother journey. So we've got stocks, we've got bonds. What other options are out there in the investment universe?
Well, there's real estate, which often has this image of being only for the super rich.
Yeah, that's what I've always thought too. You need tons of cash to buy property, right?
That's a common misconception. While buying a whole property can be a big investment, there are other ways to get involved in real estate without needing a fortune. Have you ever heard of REITs?
REITs. Can't say that I have. Is that some new real estate lingo?
It's simpler than it sounds. REIT stands for Real Estate Investment Trust. Think of it like owning a tiny piece of a shopping mall, or an office building, or even a hotel.
Oh, interesting. So I can invest in real estate without actually being a landlord.
Exactly. REITs allow you to invest in real estate without having to buy and manage properties yourself.
Okay, that sounds way more manageable and way less likely to involve late-night plumbing calls. So we've got real estate. What else is out there?
Two other popular options, especially for those just starting out, are mutual funds and ETFs, which are exchange-traded funds.
Mutual funds, ETFs. Okay, those sound familiar, but I could use a refresher.
Think of them like pre-assembled investment baskets. They pool money from multiple investors to invest in a diversified mix of assets, like stocks or bonds.
So it's like having a little bit of everything in one package.
Exactly. Let's say you want to invest in technology companies, but you don't want to research and choose individual stocks yourself. You could invest in a tech-focused ETF that holds a basket of stocks in that sector.
So it's like having a personal investment team doing the heavy lifting for me, but without the big fees.
You got it. They simplify diversification, even if you're working with a smaller amount of money.
That's a pretty sweet deal. Okay, so we've got stocks, bonds, real estate, mutual funds, and ETFs. Wow, that's a lot of options. I can see how it would feel overwhelming to someone just starting out.
Absolutely. It's like walking into a huge supermarket with endless aisles and trying to choose what to buy for dinner.
Right. Where do you even begin?
Well, the key is to start with a plan. And the best place to begin is by thinking about your financial goals.
Okay, that makes sense. But what would you say to someone who's feeling stuck, who doesn't even know where to begin with setting those goals?
It's like that age-old question, what do you want to be when you grow up? But instead, it's what do you want your money to do for you?
I like that. So it's about figuring out my financial dreams.
Exactly. Retirement, buying a house, traveling the world. Once you know what you're aiming for, it's much easier to figure out how to get there.
So define those dreams first, then figure out the financial roadmap to make them happen. Got it. What comes after setting those goals?
Research. Think of it like planning a trip. You wouldn't just hop on a plane without knowing where you're going, right?
Definitely not. Well, unless it's one of those spontaneous last-minute deals, but even then, you got to do some quick research.
Exactly. It's the same with investing. Take some time to learn about the different investment options we've talked about, stocks, bonds, all of that. Figure out what makes sense for your goals, your timeline, and your comfort level with risk.
So do your homework. Don't just jump in blindly.
Precisely. Knowledge is power when it comes to investing. It helps you make smarter decisions and feel more confident about where your money's going.
That makes total sense. But I have to admit, part of me still pictures those old movies with guys in suits yelling on the stock exchange floor. Is that what I should be picturing? Do I need to be calling up fancy stockbrokers to get started?
Thankfully, those days are long gone. Investing is way more accessible now. You can do it all online.
Okay, phew. So no suits required, and I can do it all from my couch. That's more my style. So how does someone actually get started? What's step one?
You'll want to open an investment account with a brokerage firm. Think of it like a bank account that's specifically designed for investing.
Okay, an investment account. Got it. And do I need like a ton of money to open one of these accounts? That's always been a big question mark for me.
That's a really common misconception.
Yeah.
You absolutely do not need to be wealthy to start investing. Many brokerage firms these days have very low minimums to open an account. Sometimes it's even as little as a few dollars.
Wow, really? Just a few dollars to get started. That's way less intimidating than I thought.
Exactly. And the great thing is, lots of these online platforms don't charge commissions for trades anymore.
Commission free. That's awesome. So I can dip my toes in without feeling like I'm shelling out a bunch of extra fees?
Hmm.
I like it. Okay, so I find a brokerage, I open an account online. Then what?
That's where your research comes in. You can start putting your investment plan into action, choosing investments that align with your goals and risk tolerance.
Okay, so I'm picking my investments based on my research and goals. But is it better to wait until I have a large chunk of money to invest? Or can I start small and add to it over time?
That's a great question. And you know what? You don't need a pile of cash to get started. Even small amounts, consistently invested, can add up over time. Remember that snowball effect we talked about? That's the power of compound growth.
Right, compound growth. So the sooner we start that snowball rolling down the hill, the bigger it gets.
Exactly. It's like that saying, the best time to plant a tree was 20 years ago. The second best time is today.
I love that. So if I can only afford to invest a little bit each month, it's still worth it.
Absolutely. Consistency is key. Even if it seems like a small amount, those small, regular investments, thanks to compound growth, can grow significantly over the long term. It's like building a muscle. You don't start by lifting 100 pounds, right?
Yeah, I can barely lift my coffee cup some morning.
Exactly. You start small and gradually increase the weight as you get stronger. Investing can be similar. Start with what you can manage and increase your contributions over time.
Okay, so slow and steady wins the race, even when it comes to investing. So we've got our goals, we're doing our research, we found a brokerage online, and we're ready to start investing what we can afford consistently.
You've got the right idea. But remember, investing isn't a set it and forget it kind of thing. It does require a bit of attention every now and then.
Oh, really? Tell me more. I'm all about staying involved and making sure my money is working hard for me. What do you mean by that?
Well, it's about staying engaged, kind of like tending a garden,
Yeah.
You plant the seeds, you water them, but you also got to adjust things along the way, right? You got to make sure your plants are getting enough sun, maybe add some fertilizer, prune back any dead leaves.
Okay, I like that analogy. So it's not enough to just plant the seeds of our investments and walk away.
Exactly. It's the same with your investments. The market's going to fluctuate. There'll be ups, there'll be downs. But the key is to stay informed, review your portfolio every now and then.
So it's about being flexible, adjusting my approach depending on how things are growing.
Exactly. Think of it like visiting your doctor for a checkup.
Okay, yeah.
You want to stay on top of your health, right?
Right. It's about preventative care.
Exactly. Investing is similar. It's about staying proactive with your financial health, making sure your investments still make sense for you.
So how often should people be checking in on their investments?
Well, there's no magic number. Some people prefer to check in more frequently, others less often. It really depends on your comfort level and your investment style.
Okay, so find a rhythm that works for you, kind of like how some people hit the gym every day and others prefer a weekly workout.
Exactly. The important thing is that you're staying involved, not just ignoring your investments for years on end.
Right, because our goals and circumstances might change, and our investments should reflect those changes.
Exactly. Like we talked about earlier, your risk tolerance might shift over time.
Right, when you're younger, you might be a bit more comfortable with risk.
Exactly. And then as you get closer to retirement, you might become more conservative.
So it's all about adapting to those different life stages and making sure our investments are still aligned with our overall financial plan.
Absolutely. It's about making your money work for you, not the other way around.
You know, this has been incredibly eye-opening. I think we've demystified a lot of the jargon and hopefully made investing feel less intimidating for our listeners.
I hope so. It's something that everyone can learn and benefit from.
Absolutely. So, for our listeners who are feeling fired up and ready to begin their investing journey, what's the one key takeaway you want them to leave with today?
That investing is a journey, not a race. It's not about getting rich quick. It's about making informed decisions and watching your wealth grow over time.
I love that. Slow and steady wins the race. And remember, everyone, this deep dive was just the start. We've only scratched the surface of the investing world. What investment strategy are you most curious to explore further? Keep learning, keep exploring, and remember, the most important step is the first one. Thanks for joining us on this deep dive into the world of investing.